that's what we're actually going to do here. We're going to take professional trader systematic processes that are used by the vast majority of professional traders at hedge funds and investment banks and apply those systematic processes specifically to the Forex market. Now, there's a lot of noise, a lot of misinformation in the Forex markets, and probably in the Forex markets more so than any other asset class or any other market out there. And there's specific reasons why this is the case. It's because the Forex market is very heavily traded, and a lot of people with conflict of interest go out there and either push people in a direction to do the wrong thing, or they give a lot of misinformation in order for them to get paid. We're going to completely do the opposite. And the reason why we're doing that is because we are professional traders and we have no agenda behind except to teach you how to do this properly. So as we go through the course, you're going to see a lot of things that might even be new to you, which is a great thing because you're either new to Forex and you've never seen anything in the Forex market before, and this is a great place to start, or you've been around the Forex market a long time as a retail trader, and maybe you've had limited success or even lost money, failed to make, or just lost a lot of money. You're not alone. There's a lot of people in the Forex market, in the retail Forex market, that lose money. In fact, the vast majority do lose money. There's some very specific reasons why. We'll be looking at those inside the course. But it's nothing to feel bad about because there's a lot of misinformation and conflict of interest in the retail Forex trading market. And it's very difficult to actually avoid it. Well, just by being here now, you've already started to avoid it. I can assure you that we're going to be taking the professional trader approach, and we're going to be helping you to become consistently profitable. Before we actually go into building out these large and sometimes complex systematic processes, what we're actually going to do is lay a foundation for you. And what you're hoping to achieve in the first part of this video series is to actually get yourself a really solid understanding and build a foundation in understanding the underpinnings of the Forex market. The first thing we're actually going to focus on is the definitions of currencies. What you're going to find is that there's some widespread kind of classically accepted definitions of Forex. And these definitions tend to focus on the size of the economies of the currencies that people look at. In video one, we're going to look at these classically accepted definitions, and we're actually going to compare them to what real professional traders do. So what you might find is, for example, when you go into the Forex market as a retail trader, is that everybody defines or groups currencies in certain ways. It's actually completely wrong. The way professional traders do it is they group currencies in terms of opportunity, and opportunity comes from volatility. So without further ado, let's get started. Let's go over to video number one. We'll look at the definitions of currencies and start to build out this foundation. Once we've built this foundation, then you'll have a proper understanding of all the basics of the Forex market. Therefore, you'll be able to move on to the more complex systematic processes. So I'll see you on the computer screen. Okay, so welcome to the computer screen. The first thing we're going to do, we're going to take a look at the overall structure of the course itself. This is just to give you an idea of where we're beginning and where we're going with this. What you're going to find as we go through this is the video series is really a major lesson in macroeconomics and international trade, as much as it is a lesson in trading and portfolio management. And this is really due to the professional trader systematic processes that we're going to go through in order to obtain currency positions. And what we're going to find is that actually the professional approach is very much in the majority driven by fundamentals. So the split really is, roughly speaking, about 80% fundamental and 20% technical. And those fundamental situations that we're going to be looking at really are what we call drivers. So fundamental drivers in macroeconomics and international trade that generate for us high quality trading ideas. And then we're using technicals in the minority to overlay our fundamental analysis. And it's very much the case that if you walk onto an investment bank trading floor or walk into a hedge fund, that you'll find roughly that this split exists, that 80% of everything professional traders do in the currency markets is driven by macroeconomic fundamentals. And really anybody that tells you that this is not the case is lying and probably has a conflict of interest with your own objectives, which is to really learn how to use your own money to make consistent money over your lifetime from the currency markets. Fundamentals, macro fundamentals, drive idea generation in currency trading as much as any other asset class for professional traders, if not more so. Now, the process that we're going to go through, the systematic process, really is anchored to idea generation. That's driven by all things macro, fundamental, as we've already pointed out. But it's then followed by what we call a gatekeeping process, which consists of generating high quality watch lists, i.e. high quality trade ideas that generate high quality watch lists, and then overlaid with technical and price action indicators. The gatekeeping process is essentially what we use for timing and stopping us doing stupid things with our own capital. So idea generation in the majority fundamentally driven, then followed by a process by which we stop ourselves doing silly things with our own capital. And the gatekeeping process consisting of watch list, technical and price action overlays. The gatekeeping process is, generally speaking, a timing mechanism. So fundamentals followed by timing. Then we have professional trader risk management and self-awareness statistics. Now, if you've ever heard of the trading strategy global macro, or heard of, for example, global macro hedge fund managers, this is what the course is going to teach you. It's going to teach you exactly this approach and exactly how to implement the approach in your retail trading accounts. Whenever you walk onto an investment bank trading floor or a hedge fund floor, the proprietary traders at investment banks and the hedge fund managers, if their remit is global macro, then this is exactly the approach that they take. So overall, the course is 80% fundamentally driven, 20% technical, and we go through several steps in order to take real positions with real money, that being macro, fundamentally driven idea generation, a gatekeeping process, a risk management process, and self-awareness. So let's start the whole process and let's lay out the real objective here. The real objective here is to provide retail Forex traders, so you guys, with a systematic approach to predicting future currency moves in the same way that professional traders and hedge fund managers do so you can implement exactly the same approach and make consistent money from it over your lifetime. Now, the systematic approach starts with idea generation, but there is actually a huge shortfall in understanding and knowledge in the retail trader environment versus the professional trading environment in currency markets themselves. And what we have to do first is actually plug that gap. We need to basically understand the idiosyncrasies of the currency market so we have a fundamental understanding and foundation of what currency markets are all about. And no two asset classes are exactly the same. Currency markets have different idiosyncrasies and details to them that differ from stock markets, commodity markets, and bond markets that we just have to learn. We have to learn these things so we have the foundation in order to build a real systematic process on top of that. Once we understand all of this stuff, we can really then move on to building a systematic process. Otherwise, if we don't have this foundation, we could find ourselves struggling with these idiosyncrasies when we build out a systematic process later on. So what we have to do is get all of this out of the way and make sure that everyone going through the video series as retail traders get this foundation and understanding of the idiosyncrasies of Forex markets.